Dear viewers, we want to congratulate the people of Bangladesh and the Bangladesh government on the graduation of a developing country by the United Nations, and welcome you all at British Bangladesh Chamber of Commerce and Industry present Business Talk Season 2. We are also delighted to have Mr. Ifty Islam, Chairman of Asian Tiger Capital Partners, with us to talk on leveraged buyouts, a case study on Asda, how to buy a 6.8 billion supermarket for only 780 million. Also, he will be bringing you an up-to-date on the budget, which is going to be published tomorrow. And I'm sure that you will have a very thorough elaboration on that. And Mr. Ifty Islam is one of the very expert person on that. This show is live broadcasted on BBCCI Immigrant Channel and Probash Katha Facebook page, and will be uploaded to Immigrant Channel YouTube. Dear viewers, you can write in comment section if you have any question or questions to my experienced guest. Also, please share and like this video when it is convenient. First of all, I would like to bring our distinguished guest, Mr. Ifty Islam, on screen. Very welcome, Mr. Islam. And I would like to thank you on behalf of all members and board of directors of BBCCI for your presence at our show.
Welcome.
Thank you once again. First of all, if I may ask you, or may I request you to please, on your initial statement or initial speech, if you outline our discussion area, and then slowly we're going to go in details with your permission, Mr. Islam.
Sure. Well, I think that, I guess one of the interesting things is this this proposed takeover, leverage buyout by the Issa, Mohsin and Zubair Issa, the Issa brothers, who are trying to take over Asda, the largest UK supermarket chain. That's a £6.8 billion deal. And I think what's really interesting about that is it's the largest leverage buyout in UK history. And there's a lot of debate as to whether it's the right thing for Asda, whether it's the right thing for the UK economy. Chancellor Rishi Sunak seems to have given it some support. Because Asda is owned by Walmart, so this would be bringing US retailers, so this would be bringing Asda back to the UK. But these leveraged buyouts also impose a lot of risks to the target company, and so there's a lot of controversy about whether it's the right thing or not.
Brilliant. I'm sure that on your discussion we'll be finding out all those bits and pieces and the critical analysis of the area which is you have already initially outlined. And also, do you please give us outline of the budget discussion, like what is going to be the budget in this pandemic condition? What is your thought on that?
Sure. I think just before we move away from this leverage buyout, I think that I think it's worth highlighting some of the risks that the Issa brothers might be imposing on Asda. Of this £6.8 billion deal, this will actually result in more than £4 billion of new debt coming onto Asda's balance sheet. So for all of us, if for anybody that's running a company, or even for individual, if you take a huge amount of debt, then that puts you under some more financial pressure. So Asda will be under pressure to repay this debt. And if interest rates, bond yields go up significantly, that will increase the risk to Asda further. The Issa brothers are also planning to sell off parts of Asda and also restructure the freeholds of Asda properties. So I think while it seems a great, a lot of financial innovation or financial wizardry, there is also, I think, a lot of risks. And it'll be interesting to see whether the deal goes through smoothly. Maybe the banks that are financing the deal, they may get a bit nervous. Financial markets may also get nervous. This deal is being financed with high yield bonds, or indeed the regulators may get nervous. So I think it's a very interesting transaction, and maybe it's kind of the top of the market. It may be one of these transactions which becomes vulnerable if financial markets conditions change.
Yeah, there is various stakeholders. I'm sure that we'll be discussing those areas and their nervousness and their confidence as well. But first of all, would you please tell me why ASDA is taking such a decision of a huge risk and as you mentioned, there's a debt on their balance sheet. What really drives them to take this decision?
Well, it's not actually ASDA that's taking the decision. I mean, so the Issa brothers, along with one of the large TDR, which is a large private equity fund. So this consortium of the Issa brothers and TDR Capital, they're the ones that are coming up with a very attractive price. So actually, for Walmart, who owns ASDA, this is a great deal because Walmart is selling ASDA at a high premium in a supermarket environment, which is extremely competitive. We know that the discount stores, particularly Aldi and Lidl, have put a lot of pressure on the traditional supermarkets, Asda, Tesco, Sainsbury's. As a result, Asda, Tesco, Sainsbury's, Morrison's, they've all been cutting prices aggressively. So that in that sense, I think Walmart is very happy with the deal. The question is, Asda as a company, whether it will be under much more pressure going forward. The last major leverage buyout was actually of Boots back in 2007. And so I think that there is a risk if, as I said, if interest rates go up significantly, financial markets conditions change, that Asda may have a debt level which is unsustainable. So I think this is something that the regulators need to consider very carefully.
Okay. Before I move to further, I have a supplementary question. When I was listening to you, so in that case, do you think that it is a failure of Walmart in British market or UK market, because also they failed and they are selling their ventures to a premium price, so that is posing a risk to the UK economy and also the UK stakeholders?
Well, as I said before, I don't think you could say Walmart has failed, because if they sell something for a higher price than significantly higher than they paid for it, and probably a premium in the marketplace, I wouldn't say Walmart should be criticized. I think whether the Issa brothers pull this off, they may be taking risks with their own group. The private equity fund, TDR Capital, may be taking risks. But Asda itself as a company, if it ends up running into problems, then Asda as a company may have to scale back its operations. There may be job risks. So I think that with these leveraged buyouts, it's actually the company itself that's the target that may be at risk. So again, especially if interest rates go up, the thing about leveraged buyouts, when you borrow a lot of money, it takes only a very small rises in bond yields or long-term interest rates to suddenly make the deal unprofitable, because there's so much debt in the deal. So, given the last few weeks, we've seen a dramatic rise in bond yields. We've seen a lot of volatility in equity markets. I think this deal may be a bit risky. One of the reasons we're seeing a lot of volatility in both equity markets and bond markets is because there's increased concerns amongst many financial investors that we may see a return of inflation. We may see, as the vaccination-led recovery picks up, we may see a lot of pent-up savings and demand in the US, in the UK, and other economies. That all this money that people have been saving up and saving. I mean, there's an interesting phenomenon that's going on, which is forced saving. So you may say, well, are people really saving? I mean, given how much of a financial crisis, economic crisis, COVID has been. But actually, the reason that there's forced saving is that people, the general public, just can't go out and spend money in the way that they would. You can't go out and go on holiday. You can't go to restaurants; they're all shut. You can't. Yes, you can order online, but you can't go shopping in person. So there's many reasons why people's ability to spend has come down, and at the same time, for many people, even those on furlough, they're still receiving an income and sitting at home. People are saving money as well by reducing the transportation costs. They're not paying for lunch, as many people in the catering industry know. People are not going to work and buying lunch or dinner. So there is all this liquidity and savings that built up. Once, maybe after June, once the sort of the final lockdowns are removed or the final social restrictions are removed, there may be kind of an avalanche of spending, and that may see a pickup in inflation, and that's the reason that bond markets are selling off. Generally, when inflation risks go up, bond prices go down, bond yields go up. So these are all things that investors are worried about, and that puts things like this leveraged buyout as a much riskier transaction.
No, great to know that the issue is, as you mentioned, that at this moment that the interest rate is more stable and it can go up in certain time, which is you mentioned when the inflation rises. The issue will be what are going to be the implications for the businesses and shareholders or households, like because of there are various stakeholders, especially if we talk about the stakeholder of households, which is will be finding a more competitive market, as you mentioned, Aldi and other supermarkets are. But especially those people have invested on Asda or other market or other economy. So what are the implications on their businesses?
Well, I think that as investors, if you say invested in the stock market, not so much the Asda transaction itself, but if there is you could say a tug of war between. We saw stock markets sell off very sharply last week and the week before, and then this week they've rebounded very, very strongly. So we've had some of the worst week's performance since the beginning of the crisis, and then at least since March, April last year. In the yesterday and today's trading, we've seen a very sharp rebound. So there's a tug of war between investors in the stock market who have huge amounts of liquidity. So there's all this liquidity. And where does this liquidity come from? Because the Bank of England has not just cut interest rates, but has been injecting huge amounts of money into the economy. And the government has been spending, Rishi Sunak, as he keeps telling everybody, has given £280 billion of bounce back loans. So imagine all this money has to go somewhere, and it's going into financial assets. That's why Bitcoin rallied to a historic high above 50,000. We see a lot of buoyancy in stocks. But generally, there's an expression in financial markets: there's no free lunch. So if the government could print money and give money to consumers and households without any consequence, that's what we would do. There'd be no need for anybody to go and work. But generally, when you print money like that, there is inflation risks, and then bond yields go up. And when bond yields go up, equity markets sell off as well. So we might see the risk of more financial market volatility in coming months. So that's one risk for households. Another risk, I think, is there may be some risks from the budget itself. So I think tomorrow's budget, the Chancellor's very difficult balancing act. He needs to balance the need to not strangle and to nurture a very fragile and early stage recovery, but at the same time there is a huge fiscal debt buildup. It's forecast that the budget deficit in the UK will be almost £400 billion this fiscal year. So this is to the end of this month. So the fiscal year ends at the end of March. The national debt level is now approaching £2 trillion, and so we have this huge debt level, and eventually this debt has to be repaid. So there's a big debate: how quickly should the Chancellor tighten fiscal policy, that is, raise taxes or cut spending, and when should he do it and how should he do it? So the most likely outturn tomorrow is that the Chancellor will signal corporation tax will go up. The UK has one of the lowest levels of corporation tax in Europe. It's 19%. So there is some speculation it may rise to 22, 23%. So that will immediately affect many British Bangladeshi business people who are going to have to pay higher rates of corporation tax. I think he'll likely introduce that quite gradually. So maybe there'll be a small rise this fiscal year, and then it will go up in subsequent fiscal years. So we're going to see that. It may also be the case that the Chancellor freezes income tax thresholds. So that although he won't increase income tax rates, normally you see a rise in income tax thresholds with the rise in inflation. So if he doesn't raise those income tax thresholds, then effectively all of us are paying more income tax. So I think he'll start the process of fiscal tightening gradually, maybe by stealth. Maybe the corporate sector will pay the biggest tax. But I think that if he doesn't do this, then the risk is that the bond markets, the bond market vigilantes, some people call them, if the bond markets sell off aggressively, that will see stock markets sell off aggressively, and we may have another financial crisis. The Chancellor wants to avoid that. So I think he is correct to consider at least some modest tax rises.
I believe that we should have this discussion after tomorrow or day after tomorrow. We have done a bit earlier, or maybe we can have another one, a post-budget discussion in some point. But before I go to this budget in detail, would you please give me some idea, because I know there are many listener and the people are watching us, because we have decided our topic is leveraged buyouts, and we discussed like how to buy a supermarket only on 780 millions, which they mentioned. It seems like interesting to people, because some people may not be aware, like how it possible, what is the process, like how it has been planned, you understand. At the same time, if you can give an example, like a basic example, who are watching at this moment, they may think about a similar sort of deal in their business aspects in a smaller scale. So if you can tell us or tell the audience like how to really conduct these sort of things, and what are the process, where the finance comes from, what sort of deals need to be in place to secure those things.
Well, I think the easiest way to think about leveraged buyouts is just to think about housing. So many of the viewers, many people, during the housing boom, leading up to the financial crisis of 2008, many people were taking 95%, even 100% mortgages. In some cases, people were taking 110% mortgages. So they were actually even taking more than the value of their house. So they had a very high loan to value ratio. And when the housing market was booming, that was fine. But as soon as house prices declined, then many people went into negative equity. So one risk when you borrow a lot of money and you don't put much equity down is that if the value of Asda or the value of your house goes down, then you have a capital loss. The other big risk, and we've seen this in the past, is maybe more in the 1990s, is if you have a lot of leverage or you have a lot of borrowing, and whether you're buying a house, you're buying a business, and interest rates suddenly go up, then you can no longer afford the payments. So that's true for the buyers of Asda. That's true for people who borrow too much money to buy, say, too many properties. Some people may be tempted to borrow a lot of money to make investments into multiple properties and rent them out. But if interest rates go up, then maybe their interest payments will be greater than their rent, and they will have to be forced to sell their properties. Now, if too many people do that, that's what causes housing crisis. So that's the way to think about it. There's nothing. Borrowing and borrowing for investment is normal, whether it's for housing or it's for business. But people need to think prudently about the risks when they borrow, not overborrow, and be cognizant of either changing economic conditions or potential rises in interest rates.
So does it not good? Like, are these leveraged buyouts not a good options, even? Because from your speech, which is make me to concern about that, like, is not a good buyouts.
Well, I think that at this stage in the economic and financial cycle, with a lot of risks of higher bond yields, we saw just 2 weeks ago, bond yields going up, from 1.2% to 1.6, 1.7%. Although 1.6, 1.7% bond yields are not very high, actually that's a dramatic increase. That's almost a 50% rise from 1.2% to 1.6 or 1.7%. So this high financial market volatility and this high uncertainty about bond yields should make both the government as regulator and the regulator, the Bank of England, more concerned about leveraged buyouts. It should also make banks themselves who are financing these leveraged buyouts much more cautious.
So that means this Bank of England or any other regulatory board should be more aware about this and more concerned about this. And what is their role? You evaluate them. Are they doing well to protect these businesses or protect these stakeholders, or they are a bit leveraged on leveraged buyouts cases?
Well, again, you have to just go back. The history of financial markets is the history of short memory. But if you go back to 2008, people have forgotten Royal Bank of Scotland went bankrupt. Why did Royal Bank of Scotland go bankrupt? Because it lent too much money to business people, and particularly to businesses in the housing sector. So when there was a huge, it was the over borrowing, over leverage, excessive borrowing that caused the 2008 financial crisis, which caused a huge banking crisis. And so I think this time around, the banks in the UK and the US are in much better shape. The banks themselves have not leveraged as much, but I do believe that the regulators should also be a bit cautious about trends in the financial markets, over leverage, the risks of financial market volatility coming back to haunt them. I think this time around, maybe there's more risk for retail investors in the stock markets. If we remember a few weeks ago, a month ago, we had the GameStop saga, when we had these incredible volatility in GameStop and some other stocks in the US, because we had this, tens of thousands, hundreds of thousands of retail investors chasing up the value of GameStop. So it went up 700-800% in a matter of weeks, and then it collapsed back to by a similar amount in a matter of days. We're also seeing a lot of volatility and frothiness in Bitcoin, as I mentioned before. So I think that regulators need to be careful, because when the source of all of this volatility, a lot of this volatility is this, again, massive liquidity. So the Bank of England or the US Federal Reserve, governments have had this massive monetary or fiscal stimulus to keep the economy or the patient from going into cardiac arrest, or stopping the economies seizing up during COVID. And I understand why they did that, and it made sense. But sometimes if you give too much stimulus, then that also puts risks into the economy.
That's brilliant comments. I'm sure that is too much stimulus is really a risk for the economy, and which is probably we don't want. And also, without stimulation, we understand that the economy is going to be collapsed as well. So it is like win-win risk in both cases. My final question to you, I'm sure that you have already covered a bit, but does it poses risk to the recovery?
Well, I think that financial market volatility is a risk for the recovery. I think over-aggressive fiscal tightening too quickly is also a risk, and that's why I think that the Chancellor Rishi Sunak will move very, very gradually. But if he, as we said at the beginning of the discussion, if he doesn't tighten fiscal policy at all, the risk is that the bond market sell-off may do it for him, and may cause financial markets instability and another financial crisis like 2008. If he over-tightens, that will also be a problem. I think the key thing, and Brexit is another big risk for the UK economy. We've seen overwhelming evidence that Brexit is not moving as smoothly. It's not as smooth as the government has promised us, and many small businesses who export to Europe are struggling because EU buyers are giving up on buying from the UK, because it's so hard to ship goods and services and overcome border restrictions have become quite frictional. The post-COVID travel restrictions is another big friction for international trade. It's extremely difficult to travel now. This 10-day hotel quarantine for redless countries is difficult. I was reading yesterday they're accused of 8 to 9 hours at Heathrow for travelers arriving. So there's a lot of these frictions that is a risk. I think that what we would I think one thing we can look for from the Chancellor tomorrow, and I think will be very welcome, and I think it's this is one of the things that he's been hinting, is the support for a technology and innovation-led recovery. And I think the Chancellor is likely to announce a number of measures to support new technology businesses amongst SMEs, technology transformation, innovation, digital entrepreneurship. There'll be equity loans, there'll be debt financing. I think he'll give a particular focus to fintech, even to fintech and digital visas. So it'll be much easier to hire overseas workers. So I think these are the kinds of areas where I think that the British Bangladeshi community should be focusing. If the digital transformation or the digitization of the economy has been accelerated by COVID, And so whether it's the boom in Amazon or Zoom, working from home, e-commerce, digital payments, food delivery services. So I think that from the restaurant sector, many restaurateurs should be thinking about digital transformation. How can they move to cloud kitchens or embrace deliveries or reinvent their restaurant, move online, have a stronger online presence? How can many restaurants that may struggle to survive, even after June, how can they reinvest into new digital businesses? You may be a restaurant owner who starts up an e-commerce platform. So I think these are the kinds of things I would recommend that our viewers think about, which is trying to look beyond the furlough scheme or the fiscal stimulus or low interest rates, and how can they find new opportunities in the new digital economy post-COVID.
Great. You have mentioned most of the areas of your expectation, but if I may ask you, if you can name 3 of the expectation from tomorrow's budget from Rishi Sunak, what is going to be in your priority list? What is going to be your bucket list, number 1, 2, and 3?
Well, I wouldn't say it's my priority list, but I think what is more likely, number 1 is there's going to be a rise in corporation tax. The question is how much and how will it be phased in? I think there's going to be a freezing of income tax thresholds. But I think that the Chancellor will also be providing additional fiscal support for small businesses. There's an expectation more than £5 billion is going to be allocated to businesses in the hospitality sector, and that includes British Bangladeshi restaurants who are still suffering because of the lockdown. So I think that we'll see a kind of, on the one hand, some trying to take back money from fiscal stimulus in some ways, but also adding fiscal stimulus in other ways. So I think that there'll be a mixed picture for many British Bangladeshi business people when they look at the budget tomorrow. But again, I would re-emphasize, of course, we understand that the last 1 year and probably the next 6 months is about survival for many businesses, especially restaurants, given that high streets are shut down. Any opening will be gradual and will still involve social distancing. So it's going to be very difficult for the restaurant catering sector to achieve anything like the profitability they had before. But people should either leverage technology to make their businesses more efficient, to find new business avenues or revenue opportunities by using new technology platforms, or indeed reinventing themselves. So maybe some people who have been in the restaurant sector or running a grocery store may be the next digital entrepreneur.
I was about to finish. I had a question, but it's more similar. Mujahid Khan, he mentioned, why do you think the British Bangladeshi business had been slow to digital transformation? I'm sure that you have your thought on this as well.
No, that's a very good question. I think that I wouldn't say it's the British Bangladeshi business people alone have been slow, but I think that sometimes it's a lack of awareness. So I wouldn't say education, a lack of awareness of what have been the digital trends. Sometimes there's a complacency or inertia. So people think, well, I've been running my restaurant for the last 20 years successfully, so why should I change? Sometimes it's, as I said, people don't know what the opportunities are, or indeed how to embrace the opportunities. So I think that for this reason, I know British Bangladesh Chamber, Bashir Ahmed, and a number of us are looking to create a platform to encourage digital entrepreneurship, digital transformation, both amongst established businesses and indeed amongst the students and the younger generation. So this has been a once in a generation, a horrible crisis for many people, but we have to see what the new opportunities are in this post-COVID, in this post-COVID digital economy. So I think that's going to be the key focus.
All right. Thank you very much, Mr. Mujahid Khan. Yes, your second question, I believe we agree both on these cases, what you mentioned. My final thought, my final question is quite similar with Mr. Mujahid Khan question. He mentioned about the digital entrepreneurship and digital market and digital transformation. But my question is to you, the market economy or economic condition or the capital markets and overall the economic conditions which is most likely in our British Bangladeshi businesses are not very much aware about. They are not very much keen to know what's going on in the economic in the market. So for them, what is your advice? Why to really look for information? Why to really go to get an up-to-date information about the market condition? Because what you have mentioned so far in our entire discussion, which is all about the capital market, because the capital market embraces almost all aspects of we have discussed. But most of our British Bangladeshi communities and British Bangladeshi business owners, or I would say community-oriented business owners, are not very much keen to know what's going on in the market condition. So for them, what is your advice, the final advice?
Yeah, in fact, I wouldn't. I mean, even though I'm from a capital markets background, I wouldn't recommend that. That British Bangladeshi business people or indeed households, they should really focus on the stock market or capital markets investments. That's nothing wrong with that. But I think the key thing is to find new economic opportunities. That may be as a technology company. You may be in e-commerce. You may be in creating digital content. You may be a student or a young person sitting at home that becomes can create some fantastic content on YouTube and can monetize that by selling products. So it might be that people. I mean, one thing I wanted to close by saying is that there's a lot of people who are watching who may be scared of technology and think to themselves, okay, I mean, I don't know much about technology, but I think it's not a matter of. I mean, some people are computer scientists or technology specialists, but actually, technology is a tool. So the question is, can as I said, the restaurant owner go to using cloud kitchens? Can people sitting there generate new digital content and use that to sell goods and services? I think I would end by saying that I'm quite optimistic about British Bangladeshi businesses and indeed the younger generation. I think that you can see from the performance. I mean, the Bangladeshi economy. So going back to Bangladesh itself, Bangladesh economy grew at 4% last year, when the UK economy contracted by 10%. So Bangladesh itself as a country was the most resilient country in the world to COVID. I think that represents a tremendous resilience and innovation of Bangladeshi entrepreneurs. And I think that's true of British Bangladeshi entrepreneurs as well. So I think we need to find the right collaboration to increase awareness and education, to let people know about what the opportunities are, to give them the tools, technology tools to find new economic opportunities, to help them with achieving financing. And I'm quite optimistic that the British Bangladeshi business community, the British Bangladeshi community overall, especially the younger generation, may come out from this COVID crisis, this horrible crisis, stronger than they entered it.
Great. We all optimistic, and we hope that this economic condition will be on our favor. And I'm sure that everybody has got a strong resilience, and from that point will come out. And thank you very much for your time and a wonderful discussion. If anything you would like to add on top, you can. If not, then we'll be ending the program.
Nothing major to add. As I said before, I think a number of technology specialists, businessmen, entrepreneurs. I mean, we're all British Bangladesh Chamber, and we're all looking to find the right collaboration and create a platform to support digital entrepreneurship. That's one of our collective goals for 2021. And again, all I would really conclude by saying is, just I think reach out. That there are a lot of resources that are available from within the community. There are resources in universities, from the government, and from technology businesses. So anybody watching, I would say that you will find opportunities in unexpected places. You may also find opportunities in greater collaboration with Bangladesh technology business people themselves. So hopefully as we see the vaccinations being rolled out, we see a vaccination-led recovery. Don't go back to business as usual. Look for technology disruption as an opportunity.
Thank you very much. I would like to conclude by thanking our viewers who has supported with their comments and thoughts. We are thanking you for your time and valuable thoughts. We'll be seeing you in another show. And thank you, Mr. Ifty Islam, for your time. Goodbye.
Thank you. Bye-bye.